Mike, there'd been some technicians yesterday who were looking at BKX against the S&P, BKX against the NDX, and saying it was time to revert a little bit. Did we witness a decent test this morning?
It seems like it. I mean, it's been pretty stretched for a while, those relationships. It did seem yesterday there was a little bit of buckling in there when you had the big NASDAQ 100 type names back off a little bit. I think one lesson from the action just this morning is that, you know, the average stock has been in a kind of a correction mode for weeks now. The equal weighted S&P down 8% coming into today, down another 1% today. So you've had a lot of kind of backfilling in the under the surface of the indexes for a while right now, and you really need it all to stay weak, including the big names, for the whole market to break. So I do think that it's very technical, it's very tactical, it's very much about positioning and squeezes and, you know, where are people crowded and where are they not. So that's, I think, what's going on right now. But you can dial back too and say this is like the third or fourth 5% pullback from a high that went only that far since about the beginning of April. So I think that's the push-pull that we're observing right now.
Steve, when you look at the banks from a stock standpoint, do you begin to think about what Q2 provisions will look like, whether or not this job loss, personal strain on balance sheets are going to result in terms of loans and mortgages?
I think so, Carl, and I think you really asked the right question. It's the sort of a question that Powell's asking, and I think a question the market's asking here, which is, this is a sort of off the mainline example here, but Verizon this morning said that delinquency rates are only like 2.5%. And that's kind of what you would expect, in part because the government appears to have stepped forward and replaced a lot of the lost income here. And that's why, you know, you have these provisions and you can't really know exactly what the delinquency rates will be for this month and next. But as you were suggesting, what happens in July? What happens in August? Will the income replacement be there? People, look, on average, there's going to be some people who are going to be left out, people not getting unemployment claims, people who may not have gotten government checks, some of the businesses that didn't get those PPP loans. But on average, the income is there in the economy to replace what was lost from the government, okay? And so what we don't have is a plan here for July and August. To the extent that Powell and others are talking about the uncertainty down the road, it's that uncertainty. Where is the money going to come from to pay those bills? And do you then start to have to work, which is what I think Mike is talking about right there, to think about higher delinquency rates in the next quarter if you don't get that replacement?
Jonathan, I want to know if economists are talking to you about the possibility of, I don't know, zombie companies being out there because of some of the moves that you're talking about, the fact that there's been so much stimulus, the fact that it's hard to see what the real economic consequences are for what's going on. There might be companies that haven't let workers know yet that they're not going to be viable going forward because they don't know yet. People who think that they have a job really don't, and therefore we could see the impacts of this stretching well into the fall and perhaps the winter.
There's no doubt there will be zombie companies, Jonathan. John, you have to sort of ask the question, which is, how does the government make a choice between saving those companies that deserve to be saved, saving those companies that don't deserve to be saved, and even if they did before the crisis, may not need to be in existence afterwards? There's simply not a very good way for the government or the Fed to cull those out. The problem with this downturn is you look to a downturn, a regular recession, you say, you know what? Those who don't survive probably shouldn't have survived, and the strong will survive. And so you have what we call creative destruction. I'm not sure, and I don't know the answer to this, the extent to which you want creative destruction to work in this process. Because let's say you have a company, a nail salon on one side of the street, another nail salon on the other side of the street. One of them got a PPP loan, the other didn't. Even though this other one may be a better run company, that one's going to survive. It becomes random. So this is going to be an outcome like nothing we've ever seen, where the normal processes of economics are not working, and in a sense, the government is suspending.